It's midweek update time. Joe with you here on the 15th of February. I hope you guys had actually a pretty good Valentine's Day. We don't do much of Valentine's Day around this household, but hey, it's been really cold. So hopefully you guys stayed nice and warm. Let's get into it. I've got my 2 cents. We're going to share some trades. You guys know the deal. Take responsibility for the outcome. So let's just jump straight into what I thought was interesting. The CPI comes out. The CPI that has been controlling the markets since the end of last year, and the reaction to it has gapped us up and crashed us down, and everything's gone nuts. And it comes in a little hot, a little hotter than expected, not on just the core, but in every aspect. Every one of them was a little hot, and the markets just didn't do anything. They're just over it. Kind of bored. Now, we talk a lot about this here at Maverick when it comes to complacency in the markets, or after a while, you just get so tired of this being a huge event, the markets just kind of put it off. And that is an absolute confidence. It's complacent sentiment there. It's a complacency in the markets where they think they have seen the worst, and maybe they have, maybe we have. I don't want to try to project anything. However, the reaction to it is, you know what, tell me something I don't know. We're past that. Let's take a look at the lows in January and the end of the year. We're well above this. We're at resistance levels. Tell me something I don't know. So there's a comfortable positioning going on out there. And last week I talked about this fear of missing out, which was that last surge to the upside, which can create blow-off tops. I didn't see too much participation in the volume. So it was kind of a small blow-off top, but it didn't really go anywhere. So we've got a complacent market. Now, economic data, we have the consumer is still active. Another thing that was shrugged off today, and so far the markets are it's still open. We'll see. The retail sales is going up. Manufacturing was supposed to drop 20-something percent, or at 20, at a rate of 20, and it was only down about 3 or 5. We'll take a look at the number here in a minute. But manufacturing's up. Consumer is still active. We are purchasing. We are active. And until that stops, Corey made mention of eggs. Eggs are up over 70% for the year. So there's little things here and there, and it has a lot to do with supply and demand and worries, and I get it. But we are not slowing down. Maybe we are seeing inflation come off of the all-time highs. Remember, we're at about 9%, and now we're down in the high 6s. Okay, yeah, that's a lot. It's a whole bunch, but we still have to come down to that 2.5 range. We'll see. So that's kind of my 2 cents on where we're at in the markets. Let's take a look at what some of the trades you guys were looking at, or we were looking at overall. And all of the bulls are looking good. The sideways stuff, that SPY trade is looking good. I still think these markets do consolidate and stay sideways. Boeing as well on the neutral to upside. We'll take a look at all of these: PG, Amgen, Coke. All right, let's jump over to the live markets here. All right, so let's start with Ben. So this was a bullish trade that we were talking about, and I do like the way that it pulled back. We were talking about the bull pullback, I believe. Let's see. If this is Friday, Wednesday, we're talking right around this area here to see if it could establish a pivot point, and it didn't. That's fine. It actually slipped a little bit lower, but it did definitely find support at that 20-day moving average. Volume slowing down a little bit. It's got us a little bit worried, but it's just kind of stagnant. The markets have done this. We'll take a look at it in a few more slides, but we have moved off of Friday's move higher, and Monday we jumped up, and now we're just kind of chomping around, and there's just not much to go off of. But what's strong is staying strong, and what's weak is actually staying weak. And for the first time in a while, it's been neat, because most of the stocks that we've seen have just been kind of this diagonalized straight up move since January, but we're starting to see some traders pick and choose, or once again, like I say, comfortably invested. When you get enough money in the markets, or you have enough of your portfolio invested, then you just kind of sit there. You kind of sit there and say, okay, well, let's see if these markets can go up, because I don't need to make any more moves. I'm seeing that with a lot of these. So Ben looks really good. I like it. Let's move to BK. Also into the financial sector. This one was really nice as well. We moved, sorry folks, let me zoom in a little bit. There we go. Little breakout we talked about last week, and it's consolidating above that $51 mark. It still looks really good. I like it for you guys. Hopefully have been in some sort of diagonal spread with it, or a vertical spread. It looks pretty decent. It's got that 3-day. I'm just going to circle this 3-day for most of these charts because we haven't really gained or lost anything. We're just kind of chomping around. But the complacency's there, the confidence, it's a comfortable market. It's very comfortable. Yes, now, usually when you're at the peak of the rise and you're the most comfortable, that's when it hits the fan, right? But that fan could be months away. It could be 3 days away. I don't know. Well, I got a summary slide coming up, but we'll talk about it. But I do like it. BK looks awesome. Great job. It still looks good if you want to do something sideways to up. Let's get to IBXX. So here's another one. Looks really good. I do like this as it is kind of marching up against that $500 resistance. It's an expensive stock, but the way this thing behaves is really, really neat. And we've done nothing but slope higher since bouncing off of that 480 mark. So it's a big one. It's a heavy bat. If you guys don't want to swing it, that's great, but I like it. Healthcare sector, which has actually had a little bit of some pretty violent corrections in some of the biotech specifically, but this one seems to be hanging in there and it looks really good. Obviously a vertical spread, something you're going to have to hedge this thing out. A straight call is going to be pretty expensive, and you can see the range on this is pretty big, but I do like it and it looks really nice. UBS, same idea here. Zoom in. This one popped out and then just kind of came back. I could put this more on the sideways trade, but for you diagonal guys out there, it's really nice. It looks pretty decent. Also in the financials, interesting to see that all the financials are just holding in there. So let's take a look at, just for fun, since we're on the topic, let's look at the XLF itself. Not the strongest sector, not the weakest sector. We'll get there in a second as well, but it is holding in above its resistance that it's set early on in the month. Something to think about. All right, let's move to the sideways trade. I'll do a quick, let's break down the SPY since we're here, and then I can skip over it when we get to it. That way we can get out and take a look at some of the trades you're looking at. This has been a sideways trade, and it still looks really, really good. I like it. It's going to be muddled. I do believe it could be messy. We're back up to the September high. We're not up to the August highs yet, but we did kind of poke our head up and almost touch that 420 mark, which you could see that we set back at the end of August. So we're not quite there, but it did touch it. We do have kind of a symmetrical triangle pattern developing in this area, so if you guys are thinking about a squeeze and it's going to pop, we're right at that area. I know that Corey talked about this yesterday, and I thought it was really cool, saying that, hey, at some point, he believes that we're going to retest at least the 50-day moving average, and I agree. But it's gonna take something to push us there. It's gonna have to take complacency out of these markets. The move that we've seen through January is going to have to be disrupted at some point with some true fear. And you'll see on the summary slide, folks, I'm going to focus a lot on that VIX. And so far, we haven't seen any movement. But we might see a pretty good move to the VIX on Friday, because guess what expires on Friday? That's right, folks, February options. So if anybody's doing the monthlies on the SPX, they're going to have to buy some new insurance, and we might see an influx towards the end of the week. So could that happen? Maybe. Sure. But if this complacency stays and the bears don't truly step up and try to sell these markets, well then yeah, I've got a pretty good inkling, or there's a pretty good argument to be made that we're sitting between the 410, 420 mark, at least through the rest of earnings season. We'll see. All right, there's the breakdown of the SPY, but I do like it as a sideways chart as well. What was the other one? Boeing. Boeing was a sideways to up, and it still looks like it wants to be both of those things. It looks like it poked its head out yesterday, but a little reluctancy when it comes to the candlestick of yesterday and then today's follow through. But this has got a very nice tight channel up through here. I actually went through and took a look at like American Airlines, Delta Airlines, and they're doing pretty good. So I don't know if they're all correlated. I know that Boeing is it's contractual, so it'll sell 2 dozen, 3 dozen planes, and then it moves on. But it seems to be pretty comfortable at the upper part of this range above that 20-day moving average. So sideways to up looks nice. Still looks pretty good. Let's get to our bear list. And the bear list was actually pretty cool because I was pulling them up and I was thinking, okay, based on these markets are actually up overall for the week. But I figured, oh, so most of the bears will be gone. But these are actually holding in there. So with PG, it did have that gap up on Monday after that Friday, but it did turn into basically, so far, it's acting like a bear rally. We got a resistance at the 140. This crossover that happened a little bit a while ago, and then a nice slope in that 20 day. So I do like it. I think it could bleed back down to at least that support level, which, guys, that's what, 136. It's about $1, $2 down from where it's at. And then maybe even lower down to the 135 mark, where you can see there's a couple things that it hit here in November and at the beginning of September. So PG looks pretty good. I like it. Let's move on to the next is AMGN. Switching over to Amgen. We're talking about healthcare. Some have been doing pretty good, but it's the drug manufacturers and some of the biotechs that have actually slipped quite a bit. This has been on a bear watch list for us for a long time, guys. Great work. Because it is just continuing to bleed lower. It did have its little bit of a hiccup, which is your bear rally, but it's back at that 240 mark, and it looks like it wants to slip through it even today at 239.27. It's a big one. It's a wide range. Playing some that's $10 between the 239 and 230, right? So if you want to play like a chicken bull, or excuse me, a chicken bear, you could cut that down from like a 235 vertical spread. But I would carry that into maybe March, because it's going to be it'll be pretty volatile. So it looks good. Coca-Cola. Also, Corey brought this one up too yesterday. I thought that was pretty cool. He liked it as well. You guys liked it from the week before. I think we liked it before that. And it's doing the exact same thing that we saw it do last week at the end before that gap up on Monday. But that just faltered out. And what I like to see is when they fail. So you get the pretty big bounce or the follow through from what we had on Friday, and then it just fizzles out. And that, I'm going to come back and say it again. I just need to see a bear presence hit these markets and see if it's just a stubborn, complacent bull that's out there that doesn't have to do much. Because if the bears really put up a fight, I want to see how many bulls fight back. I don't know if we just have that sustainability. Anybody that's in is in. And I'm starting to see that. So it'll be interesting to see the first bearish push, how many bulls jump in and say, oh, great, now here's another opportunity to buy into it. We haven't seen it yet because the bears are a little bit reluctant to sell into these markets because of the strength we've seen since January. Coca-Cola, however, just immediately sold off. Look at the volume. That might be earnings. That might be something. But immediately, as soon as it saw any sort of inkling or happiness, and it did it earlier at the end of January, it got sold into pretty good. So we'll see if that's going to continue. All right, and the last one is XEL. Let's take a look at utilities trade, and I do like it. It's been holding on to that 68 for a while, but it looks like it might be slipping. It was a gap down. You'll see here, guys, that a big move to the downside in oil and gold. I haven't seen gold make a move that it has here in a while, but it's dropped pretty strong. But this could just be following suit. So I do like it, and it looks pretty good. All right. Let's get back to the PowerPoint, and we'll continue with our sectors. And then we'll jump back out and take a look at some more stuff. So let's get into the market analysis. Yes, you've been hearing me babble, but let's take a look at some of these numbers. So the diamonds, the SPY, and the Qs are all up, and the majority of this move up was Monday. Keep that in mind. We gapped up after a pretty good move to the upside on Friday, and we have just parked it. Now I would expect these things to roll over quite a bit after that CPI number, and the markets just brushed it off. Look at oil and look at gold. I haven't seen a move that big in gold up or down in a while, right? It's usually down 0.25 or up 0.25. Here is almost 1.5% drop to the downside. So the market's complacent, or they're preparing for something, or expecting the dollar to continue to increase. I'm not sure. So let's get into the chart. I already talked about the SPY. We're in a consolidation mode. I do believe that we stay that way. Let's get to the diamonds. This one is a little bit more of a high base. When you zoom out on this, and I promise that I keep talking about doing it, we're already at those August highs. We've already shadowed above them. We have this nice ascending triangle pattern going on. This is a little bit more bullish than it is kind of a bearish correction like the other two markets. So we'll see if that's going to continue. I wish I had something new to talk about, folks, but these markets are just churning sideways. Q's a bigger surge off the top, but once again, it looks like it completely came back after the gap, retested it, and now it looks like it wants to march higher. Now, what's interesting about this is the volume's up there, but each one of these days, let me go ahead and erase that. Let me zoom in a little bit more here. Well, I guess I can't. Let's take a look at these last couple of days. So here's the close, gaps down, close, gaps down, close. There's reluctancy for follow through, but there's just no selling. There's just no selling. So every time the markets want to sell off or the buying stops and the markets gap down, they just float higher and float higher. So we have this move that could actually retest that 311, 312 area before we see consolidation or some sort of a pullback. Without bearish presence, without selling, this can happen for a while, right? This can go on and on and on. And I do believe a lot of this move in January was that, just a reluctance to sell. All right, cool. Let's get into the economic calendar. This is what I saw today or yesterday. That was pretty interesting. Usually the markets would completely react to something like that. That's higher, and that's higher. So we just did an uptick from, we came down from 9%, but 6.2% was the targeted rate. We're at 6.4, sure. Did we come back down from 6.5? Yes. So it is going south, but it's not going south as fast as we'd like to see it. Okay, what does that mean? Does that mean the Fed has to put the gas pedal back down? Not really, but they sure as heck can't ease. So the markets just seem to just let it roll off their back, and we'll see what happens moving forward. Another number that I thought was ignored is retail sales. We expect a little bit of an uptick after a fall, 1.9. That's a lot higher. That's a lot higher. Including ex-autos, it's higher. Manufacturing is supposed to drop 20.3, and it only dropped, what's that, folks? A third of that? A fourth of that? Yeah, a little bit more than that. So, yeah, we're producing, we're manufacturing, and we are consuming at still a pretty decent rate, which is going to absolutely slow this down. Absolutely. There's no way around that. And it's not a bad thing. We don't really want to. This is referred to as a soft landing right now. We don't want it to come crashing down. But the markets are expecting, or the markets have priced in the way they're trading, something a lot more substantial than that. They really believe that the Fed has overdone it and that we're going to correct a lot faster. Whether that's true or not, we'll see. So what do we got left? Well, we got the initial jobless claims. We'll keep an eye on that. This is one that we also need to see increase. They're expecting an increase up to that 200K, which is pretty cool. We'll see if that happens. We have the PPI. I'm not too worried about that. That's about it. That's about it. Yeah, the initial jobless claims will be the last thing I'm looking at this week. Okay, so with that being said, let's go pull the class and see what you're thinking. I've got 2 pulls today, like I did last week. I thought it was kind of fun. So let's do the weekly outlook first. Is that launched? I think it is. Okay. All right. So let's do the weekly outlook. What are you guys thinking for the rest of this week? And then I'm going to switch you over to the monthly outlook. I do like separating it. I think it's kind of a fun idea. And I noticed just how fast people vote that you actually think it's a pretty good idea too. A little easier. All right, 98% vote pretty quick. 94. That's right. I'm beckoning to you last 2 or 3 guys out there. You know who you are that hasn't pushed the button. That's fine. You don't have to. Okay, so let's take a look at the weekly poll. I'm going to go ahead and close it and share it. And it looks like we are at 53% flat, 35% -1, 41% +1. So we are, boy, 53. We're 0. Let's call it a 0, right? 0 to maybe a plus 0.5. Excellent. Excellent, excellent. Thanks, guys. So let's do the other poll. Monthly. Launch this. Okay, so here's the monthly outlook poll. What do you guys think for the rest of the month of the overall motion of the ocean, the larger chart, the larger time frame, weekly, daily, taking a look at 2, 3 months out, 4 months out, whatever you're thinking. We're definitely flat on the weekly, which is a 0, but on the longer term, I kind of want to see where we're at. So the poll's collecting a little slower than the last one. Actually, no, it's about the same speed. We're only 30 seconds into it. We got our same 94% voted. Okay. It's probably good enough. Yep, stalled out, 94%. And we are at, geez, guys, what do you want to call that? 24% +1, 24% -1, 35% 0, 29 +2, 18 -2. That is pretty darn even with a slight bias to the upside. I'm going to call that a +1. You guys can figure that out on your own, but I'm going to go ahead and call it a +1. But look how smooth that was. That's pretty interesting. Okay, cool. Thank you very much. And I am exactly in line with you guys. I am a 0 for the week, and I'm a +1 for the monthly outlook. Pretty easy to do considering that we are still above that resistance level. We are consolidating. The 2050 slope is, I gave it a little bit of a yellow or a heads up, and the only reason being is because that 50 is starting to flatten. But I just see choppiness. I see consolidation. I am seeing a lot of, oh geez, I lost my train of thought there. I am seeing a whole lot of follow through. So what's weak is staying weak, and what's strong is bleeding higher. We had the surge in the tech. We had a surge in the darlings. You guys can pull up those stocks and see those all. They gapped up and surged up, and now they're just a plateauing. But the stuff that's weak is staying weak, which I love because all of the stuff that you guys are submitting are continuing in the directions you submit them for. So it looks great. Cool. All right, let's get into our sector analysis. And I was saying earlier, it's back and forth. Let's get into here. So consumer cyclicals leading the way, right? This is our discretionary stuff. But communication services is down quite a bit. Now that was a huge move to the upside. We saw AT&T, we saw Verizon, we saw some of those guys just jump off of the bottom. Technology, though, is still up. Energy right next to it. I thought that was pretty interesting because usually energy and technology are pretty far apart. One's going to be down by basic materials, and then the other one's going to be up by the consumer cyclicals. Very rarely do I see technology and energy both going up or both going down as closely as they have been. So I'm starting to see a little bit of a taper. I mean, a little bit of complacency in these markets where a little higher, a little lower. People that have their money in the markets are happy where they're at. So we'll see where we go from there. Consumer cyclical, 1, 2, 3 straight up days, and they are those no selling days, meaning this is where we opened, this is where we closed, gap down, run back up. Gap down, yes folks, that's a slight gap down, running back up. There's just no selling. Plain and simple. Look at the volume. There's just no selling. It's not an exorbitant push to buy like we saw after that CPI number where that could be at blow off top. This is just an absolute float to the upside with no resistance. So let's take a look at the weakest sector, which was communication services, but take a look at it. Not very weak. It just hasn't gone up as strong as maybe some of the others, right? So it's kind of trying to stay back above that 20-day moving average, kind of back after it's a little bit of a surge, and it's climbing back up there. Volumes dropped a little bit of a hiccup to the upside yesterday. We'll see if that's going to continue, but things are just kind of holding in there and pretty comfortable moving sideways. And that's with every sector. There's nothing really jumping out at me that I really want to invest in or sell. It's this nice area of homeostasis. Let's call it that. There's no volatility issues. There's no problems. There's no worries. It's everybody that's in is in. All right. We need to see a bearish presence to test the current market's resolve. I've talked to a lot of you guys over this last week, and that's exactly what I'm hanging on. I've got a handful of positions, and they're not doing anything. My bears are slightly lower. My bulls are slightly higher. My sideways are just sideways. I'm not making a lot of money. I'm not losing a lot of money. It's just flat. I'm not seeing anything that's really rushing me into these markets anymore, even though I do have positions. But I just need to see a true scare. I want to see how strong these markets truly are, and I haven't seen it yet. So I'm waiting for that bearish presence. How do we identify that? Keep an eye on the VIX. It's insurance purchasing. We are in options expiration down at the economic data there. February options expire this Friday. We do have jobless claims tomorrow, and then the leading indicators Friday. That's usually overlooked. Now that the PCE number's out, the Fed usually tends to lean on that, but the leading indicators is actually a pretty decent measure of where we're going, and that is going to be on Friday. Happens to be the same as expiration Friday. I haven't seen too much on the put-call ratios. You guys can Google it, put-call ratios. You can get onto a website. The CBOE's got a nice little chart for you to follow. We're not seeing anywhere near the spikes that we did see in December and January, but that could change. So let's keep an eye on that. The volatility index will be a good one. In fact, somebody remind me, let's go take a look at it immediately because it did actually gap up today, even though it's just around the 20 mark. I wonder if that's the first inkling that people are actually trying to buy some insurance. So sentiment, invested and comfortable. When you get a market that goes up, it doesn't go down, it doesn't go higher. We've got a bad CPI number. The markets didn't even flinch at it. Then I've got a very complacent, invested and comfortable market. We'll see where that goes. All right, enough of me. Let's get to you. Yes, so the first thing I said I'd do is take a look at that VIX. Okay. And I'll try to zoom in on this. It's very difficult. You can't zoom in on this one, but yeah, look at that. Okay. Sorry, folks. This is just a pretty flat chart. It's not as... But look at the move yesterday, straight down, and then today. This is where it closed, and this is where we opened. That's a gap up. So I would assume it's up 9.39%, up $1.75. I would assume we're starting to see puts being purchased. Well, that's exactly what this is. There's activity in the options market for the S&P. Okay, so we're starting to see that happen. Now, with enough insurance, you get a lot less fear. So we'll see where this goes over the next day or so. Keep an eye on that. But it looks like people are running out to the insurance markets. Okay, cool. All right, let me get to the chat boards here. Let's start with steel. This is Jason wants to look at a March 3rd bull call spread, 30.32. And we will take a look at that. Yep. Nice bounce off of support there. Looks like it wants to get above the 30 mark. 29 mark, let's call it. He wants a 30.32. Sure, March 2nd. Let's draw the lines for us here. Here's 30.32. And I need to go to my calendar and see when that is. March 2nd is 2.5 weeks from now. So expiration is this Friday. The 24th is actually the 4th week of February, and this is March week 1, which is the 3rd. So 2.5 weeks out, sure. I'm fine with that one. Looks good to me. A little bit of a slowdown here. It's that strange thing. Gaps down a little bit. Looks like it's trying to hold in. You do have some good resistance here at about that 29. So we'll see what that does moving forward. But I have it down on the watch list. Thank you. All right, moving on. We got Brett. He's got, I think that's Pfizer. 45 puts. Yeah, sure. Just waiting for this thing to drop, aren't you? Boy, that thing is just stuck at that 44 level, isn't it? It really likes to just stay right there. But yeah, 45 would be a good strike on that if it starts to slip. I like the gap down today, a little promising. It does have a little bit of support there at 43, but that could be something to look at. It's going to be really interesting to see what happens with the first bear surge. And right now, there's just no reason to it. These markets aren't afraid of anything. We'll see. All right. Thanks, Brett. Robert's got Apple. Okay. It's a stock that is talked about a lot, but we don't talk about it a lot in this class. So let's see if we got a good trade on that. Oh, okay. I see. 152.5, 160 bull call, looking at a week 4 February expiration 2/24, and it's decent. These are tough to go against. You had the gap and the surge, and you've got yourself another high base. It's kind of respecting what it did in November, the end of October. You've got some consolidation here at September. Yeah, that is a pretty big line in the sand for Apple, and it could float higher. The idea is the 152.5, 160, so you're going a little bit in the money there. 54, 52 right there. Target of 160. I like it. Week and a half out? The 24th. Yes, week and a half. So he's going for week 4, which is a week and a half from now. Just expecting that last little push to the upside in Apple. Okay. I like it. I like the timing on it as well. It's very difficult, folks, when you have your sentiment or your ideal or your idea of where you think the markets are going to go versus what you should be trading, which is in front of us, right? The markets in front of us is what we trade. So I do like the timing on that as far as the outlook goes. I think it's great. Let's get into GIS. Oh, this is a nice one. I hadn't seen this chart in a while. Usually I look at General Mills, but okay. Robert's got a looks terrible if you need more bears. It looks terrible. I like it. This just looks terrible. Yeah, it's looking weak. That is for sure. Little complacent or a little consolidation here at the 76. Look at this little movement that I had here at 78. You do have the argument of support there at 74, but I do like yesterday and today's candlestick. Nice. Okay, it is. That's a good bear. Thanks, Robert. Oh, a home builder. Let's get into LEN. All right, Felix's confirmed pullback area of confluence at 100. Okay. Let's see. Yeah, nice bounce off of that. Really nice. Good resistance, good stair step, good volume there. It looks like it's got a little bit of hiccup days going on, but that's how this whole week has been. That Friday or the Monday follow through from Friday was just absolutely bullish across everything. But the last couple of days, it's just kind of hooked up. But keep in mind, yesterday was a very good argument for these markets to sell off, and they didn't. Corey made mention of it yesterday, saying that maybe it's going to be delayed. Maybe we won't see it till this afternoon or even into Thursday and Friday. But it's pretty hard to anticipate. We just have to see what's in front of us. But yes, good, strong argument here that it's going to stay above 100. Maybe see if these markets can move higher. Easy target of 110 on Lennar for sure. I haven't looked at a home builder in a while. That's crazy. They're looking pretty strong. JBL as well. Let's take a look at that. High base breakout, strong tech sector. Sure. Zoom in on this. Sure. Yeah. Just kind of leaking higher. I like that term. Good bounce off of about the 76, that 20-day moving average, and it just kind of bled up to about 83. It looks like it's kind of moving more sideways. This could be slowing. This is a pattern that I try to pay attention to, but sometimes it just goes unseen. But it is slowing momentum. So you take a look at the resistance, the moves that it's had, and so you could see that this move here was much larger than this move here. And that's just slowing momentum. It could be the sign of a topping stock. You try to correlate this with its volume, and it looks pretty good. It doesn't mean it's going to fall apart. It just means that you might get into this before it moves a little bit higher. So diagonal spread on this to the bull side, absolutely. Absolutely. That's right. I took you guys back to Market Masters, didn't I? All right. Fear measurement in the VIX now that they can buy protection less than 30 days out, and the VIX shows. James is writing, hey, do you think that that what we're seeing in the VIX is just the ability for people to buy insurance each month? Yeah, and it absolutely could smooth it out. Before, it's a huge rush to panic and then a huge rush out. And the reason being is because you can buy insurance on the SPX every week, right? It expires every Wednesday. So the majority of the rush that we did see towards the end of the year, people were buying out for the first quarter of 2023. And the most of this put-call ratio that we watched was November into December. And so we saw an obvious spike with people loading up. It was this huge amount, 2.5, 3 to 1 almost. Nowadays, we buy it when we need it. I'm going to buy it for this week. I'm going to buy it for that week. I'm going to buy it for the next week. Now, if that continues, then it's going to be hard to see a spike in the put-call ratio. But the VIX will climb. You bring up a good point, James. But the VIX will climb. There's no way around that. Activity's activity, whether it's this week, next week, or next month. So we'll have to see when that happens. Now the cool thing is, it can happen with a domino effect. When people panic, they all panic at once, and when that builds, whew, it gets crazy. All right, let's take a look at KMB for Felix as well. Let's get moving here. You guys are very active today. Low base breakdown, absolutely. Kimberly Clark. Let's put her down. Consumer defensive, starting to slip. Really weird to see the defensive starting to go and push back into some of the, well, once again, the consumer discretionary is the strongest sector this week. So a lot of risk on, if you guys are familiar with that term. Staying away from the defensive stuff and going to the speculative kind of fluff stuff that actually grows a lot more aggressive. I like it. Playing it pretty easy. I'll just write that down on the bear. Let's look at Wayfair. Support yesterday on decent volume. Sideways to look to up, looking at a broken wing butterfly. Okay, cool. Let's draw it. Well, let me zoom in first. Nice. Cool. Thanks, Dan. 165, 70, 80. Right about there. I don't have it. So broken wing in this case, he's stretching strike prices. Cool. It's a targeted move to the upside, so he's expecting a pretty good surge back up to at least this point or higher. And you got an expiration on that? March. Good. Yep. March. Cool. And he's actually probably pulling a credit out of there. Well, maybe it might be a small debit depending on where you're at, but that far out, that's awesome. This is when you get these really cool risk to rewards on these trades. If you're patient enough to sit through it, let me shrink that down a little bit. Yep. See if that's just going to bust back out into this area. I like it. I'll put it down on the bowl. Thanks, Dan. Okay, Justin likes MS here and STT for financial plays, waiting on entering for both them since I already have financial positions. Boy, these look good. This is kind of funny how they're all showing strength and they're all climbing and they're all breaking out. Makes you wonder what people are thinking when it comes to positioning. Why is the financials kind of leading the way here? But I agree. I like the pattern quite a bit. It's nice. Looks like it's already trying to break out over today and yesterday. It might just stick to that 100. But you know what's kind of a fun trade right here, folks, is the calendar spread. 100 March, 100 February, depending on what Morgan has. I imagine they've got weeklies. Just see if that thing can play this game, something like that for a little while. Calendars are kind of cool. Or you could butterfly it, right? Awesome. Let's take a look at the others here while we're on topic. STT. STT. Exact same pattern. I'll put that down. Exact same pattern, exact same outlook. I've got the exact same everything. Calendar spread right around that 95 level. Plate between 90 and 95. Something sideways, diagonal. It's great stuff. Okay. Oh, Daryl's got a question on the poll. So it's the 90% of attendees. So when I get like 94% of the attendees, today we got about 20 of you guys. So if you wanted to get that, sometimes it's smoother. Sometimes we have 35 people. Sometimes we have 10. It just depends on the week. So that's why we base it on the percentage. Hopefully that answers your question, Daryl. All right. Okay. Sorry, I'm just reading it out loud some stuff here. What do you think about a gold trade? All right, let's take a look at that. Because this is the first time that I've seen it move lower. And take a look at this, guys. This is for the week. You know, I always talk about, oh, gold's just up a little bit, it's just down a little bit. But my heavens, look at February. That's just an abandonment. I'm wondering if it's just the complacency or the belief that, hey, you know what, the markets have bottomed out. This could be the first sign of no fear, meaning that where interest rates are going to be higher, the dollar's going to be stronger, the economy is going to be great, we're totally set up for that soft landing. This would be an absolute flight out of safety in the old style of trading, right? Gold is always the flight to safety. Dollar is the flight to being a little bit more aggressive or risk on. So what I'm seeing here says February is a flight out of defensive stocks, which is my opinion. So it'll be pretty interesting. However, Justin, yes, this is breaking down. I think there's a pretty good support here at 170. You can see where it was in this picture. Let me make it a little easier for us. This ascending triangle pattern, right? If that carries forward. So, but yes, this is definitely a sign of correction. Maybe sideways to slightly bearish, right? If you believe that these markets are going to stay complacent and sideways, gold could be a fun little trade to the downside. Sideways to down. Yeah. Okay. Moving on. Okay, cool, Sebastian. All right, let me end it with that. That's a good question. He's got Corey's theory of since options expire tomorrow, for this Friday, do we think that there's going to be a big volatility? And yeah, technically we should. However, it's just basically budgeting. It's one of those things like I've got to register my car in February, right? I've got to register my car before the end of the year or the end of this month. I don't want to register it today because I technically have to the 28th and then register and pay. So my quote unquote insurance on the volatility index, if I have February expiration that is Friday, yes, I've got Wednesday, Thursday, and Friday that I'm still protected. So I might as well ride that insurance all the way to the end, regardless if they're in the money or out of the money or what I wasted, so on and so forth. So you might get a huge surge. That also creates its own problem because if everybody goes to the options market at that day, these options become a lot more expensive. It creates a lot more volatility. So it could happen, but it might already be happening. We might already be seeing some stuff roll forward with the ability to buy weekly expirations now in the SPX. That might quietly be doing this, especially if there's some traders out there that believe that this is almost over, right? If we believe that, okay, the markets are going to correct at any minute, I don't need to go ahead and buy April's or March's, but I might need them for next week because if the markets don't crash, then maybe we just run. And so it's a tough one to tell, Sebastian. It's a good point, though. So how can we tell? Just keep an eye on it. Just keep an eye on it. Yeah. Okay, so here's our list. A lot on the bull side, but they all have. There's an argument for all of these, so I really do like them. And then a couple on the bear side. Pfizer, General Mills has fallen. Kimberly Clark. They all look pretty decent. It just depends on what you guys are looking for. So, all right. Let me go through one last thing, and we'll cut it. We'll cut it loose. Okay, guys. That's all I got. Let's see how we do. So far, so good. So far, what we've been doing and what we've been sharing over the last couple of weeks has worked, both up and down. So just play to your strengths, whether that's up, down, or sideways, or a little bit of combination, and we'll go from there. All right, guys. Thank you so much for joining me, and we'll talk to you next time. Bye, folks.